Hey guys, welcome back to the channel. Hope you're doing well. Now, today's video is the first part of a brand new series I'm going to be releasing over the coming weeks, and it's basically going to be a 5-part series where I do a full week's worth of backtesting on Euro US dollar using my SMC trading system. Now, I have already recorded all of the different parts of this series, and as you can see from the video description and also the thumbnail, we do end the week on a really healthy profit of over 43%. Now, I just want to let you guys know that although I'm very happy that the week we are going to backtest is a profitable one, and there are going to be lots of really good example trades for you guys to be able to gain some real insight from, I do just want to take a little bit of time to let you guys know that this strategy, although it's very profitable, is not going to give you these returns week in, week out. This is the nature of trading. It's all based on probabilities. Some weeks can be very high, like the week we're about to go through, and other weeks will be a lot slower, maybe even negative. So I just want to give you guys that message straight away. I don't want to be giving any false image of what trading is like, because that's not who I am. It's not what the type of content that I want to be releasing. But I just, want to make that clear to you guys that, this is going to be a really great week to go through, but, don't get ahead of yourself. Don't think you're going to be able to make these profits week in, week out, because that's just not going to happen. You should always focus on those bigger pictures like the monthly, quarterly, and yearly, because that's the most important thing, long-term growth. Now, I've just got a very quick announcement to make for you guys, as I know a lot of you have been messaging me both on Instagram and Discord about a more detailed insight into my two trading systems, both the SMC strategy I'm going to be using in this video and also the price action strategy that I've mentioned in other videos. And I'm very happy to announce that I have just released the brand new mentorship program within the Discord server. Now, this mentorship program is going to be perfect for you guys who did want that deeper insight into my trading systems. You're going to be given my exact trade plans that I use in the live market and that I'll be using within this video. And you're also going to be given access to the backtesting data sheet. And this is going to be all of the data that I've collected over previous months, years of testing. And you're going to be able to go through all of this data yourself. You're going to have complete unrestricted access. And it's currently got about 400 trade examples for you to be able to go through, be able to identify those sort of high probability trade examples, and also have a much more accurate picture on the long-term profitability of both systems. Now, before I end up rambling on too long about the mentorship program, which I don't want to do because I'm going to be doing a whole video on that in the future, let's jump straight into the backtesting session and hop onto the charts. So guys, I've just pulled up FXReplay, and this is the software I'm currently using to conduct all of my backtesting. I used to just use TradingView, but it's actually quite limited in, firstly, how far you can go back, especially on lower timeframes such as the M1, but also just for, analytics. And I think that's really where FXReplay has stepped in and sort of filled that gap. I'm not going to go into too much detail just now about the actual software. I'm going to release a future video all about it, giving a full breakdown and review. But very quickly, you can pretty much make your own sessions over here. Choose, your different pairs that you want to trade. Time frame, so you could do, just a month. You could do a year. You could do several years, and you can also then divide them between your strategies. The one we're going to be jumping in today is this bottom one here. Euro US dollar 2022 0.5% risk is the name I've given it. Kind of explains why we're trading Euro US dollar. We're doing the whole of 2022. So as you can see here, the period, we've got the very start of the year to the very start of sort of 2023. And this is using my SMC strategy. As you can see over here, these are our current analytics. And we will jump straight in. As you can see, our current date at the moment is just at the end of September, so 26th of September. And I think we're going to be doing literally the final week of September in this backtest. So to get started, we're just going to jump in here and click play now. So guys, I've just loaded up the chart, and as you can see, we've literally loaded it in on the 26th of September, Monday, very early in the morning actually. It's before I'll be getting to my trading desk. So we'll actually just skip a bit forward just until around sort of 7 a.m. When I will be getting to my trading desk, and then we can sort of begin the backtest from here. And let me just jump down to M15, click through some more, and there we go, about 6:45. So this is when I'll be getting to my trade desk, and I will be starting to conduct my analysis. And as always, at the start of the week, I'm going to be starting my analysis on the weekly. So we jump up to the weekly. I never do too much analysis on the weekly. Just sort of trying to understand the overall directional bias. And as you can see, we are very heavily bearish on the weekly at the moment. We had this larger sort of swing range. We've since had that bearish break of structure down here. And we've had some small sort of internal structure continue. Most recently, we've seen price sort of retrace into this sort of internal extreme supply. We've seen a very strong reaction, actually quite a lot of momentum within this candle here. So last week, coming into this week as well. And yeah, I mean, that's all I'm really looking for on the weekly. I don't need to go into too much detail. As I said, just getting that overall directional bias, which in this case is bearish. So we'll then jump down to the daily. And as you can see, the daily is in a very clear bearish trend. So we've got, a series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and so on. And again, most recently, we've had the daily break of structure. There's no really clean demand levels to the left. I don't want to have to be, zooming back sort of years worth of data to find some demand levels. I'm much more happy to wait for price to start retracing and actually play these sells, which are a lot more high probability in this situation. So, in this scenario, we've got a recent break of structure. After break of structure, we're always expecting a pullback, but we don't want to just be jumping into longs as we still have some really strong sort of bearish order flow at the moment. But this is where we can jump down to our lower time frames and always keep in the back of our mind that these lower time frames could flip bullish to facilitate these pullbacks on the daily time frame and also that weekly time frame we were just looking at. So next we've got the 4-hour time frame. Again, you can see we do have this bearish order flow, a bit more messy within, as this tends to happen as you're sort of going down time frames. And as you can see, most recently, again, we've had that swing break of structure. And we've actually had a really impulsive move. So this is, exactly what we saw on the daily and weekly. As you know, price is fractal. So anything we see on the higher timeframes, we'll see on the lower timeframes in more detail. And again, not too much we can actually go into at the moment. We've sort of been free falling. We've had a little bit of reaction here. As always, after a break of structure, we are anticipating a pullback, but we've got no real signals that a pullback is starting yet. Even to get a change of character, we'd have to wait for price to break this high. So we're a very long way away from getting any sort of signal on the 4-hour of a pullback. So at this stage, I'm still more than happy to look for sales, continue playing this bearish order flow pretty much until it fails. So yeah, pretty much here, I wouldn't be marking too much on the 4-hour, and I would be happy to jump down to the M15. So now we're down on the M15, and I'd say this is the time frame I use the most to conduct the majority of my analysis. As you can already probably tell, the weekly and daily I only really use to get that sort of overall directional bias on the higher time frames. The 4-hour is when I start, properly analyzing the different order blocks we have, the market structure, any liquidations, inducement we have, and then the M15 is where I'm, really formulating those trade ideas before I ever jump down to the M1, which is what I'm using as my execution time frame, as you'll see later in this video. But I literally only ever go down to the M1 once everything on the M15 makes sense to me. That's where I conduct the majority of my analysis. I'm never really conducting analysis on the M1 until we're within those sort of M15 POIs that I'm interested in taking trades from. So very similar to the 4-hour, daily, weekly, we've got some very strong bearish order flow, a series of lower lows, lower highs, lower lows, lower highs, and so on. We've actually had quite a bit of volatility here, which is quite strange on EU because it did happen about the start of Asian session. So 1:45, 2 o'clock AM, that's UK time for me. Yeah, you can see we've had these two really large candles, a lot of volatility in them. As you can see, we've had a really strong push to the downside and an equally strong push back to the upside. So a lot of rejection down here. Quite strange, as I say, for Asian session. Usually these type of candles print after news, which would typically come for EU, either in sort of London session or a New York session. But, we'll trade what we can see. And as you can see, for the moment, we do have this bearish leg we're in. We've got our sort of weak low down here because we are expecting this to be run at some point. And we've got our strong high up here, which we're expecting to hold as we are in this bearish sort of trend. So the very first zone that we can sort of mark out would be our extreme supply. And this is going to be pretty much that extreme candle we've got of the swing range. And that's going to be this candle right here. It's that sort of final buy before we have any sell. It's the highest candle of that swing range. As you can see, I did already have the high marked out, but even if you just follow it back from the low of the swing range, this is that high before we have, our swing structure before that. Now, as I said, with these two candles, they don't put us in a great position because we don't have any sort of internal structure we can mark yet. We do have a sort of small pullback forming now. We can mark sort of how large that is. So it's about 43 pips, so it's fairly significant. It looks quite small in the sort of general price action recently, but I think we've had some really strong impulsive moves to the downside. But I would be happy to mark this as internal structure, but only once we actually see a break above this high. Then we have confirmed sort of internal high, internal low, and then possibly another internal high. But I'm not able to mark that out yet. We don't have any change of character or anything, again, because of this huge sort of candle. Any change of character would actually be sort of this candle up here. And at that point, we are already within our supply zone. And I wouldn't then really be looking for any longs because we are heavily bearish. So literally for the moment, I've got my M15 internal swing high sort of marked out swing supply. And, we maybe have some leg inducement possibly within here. You might argue that this candle, this sort of, as you can see, we do have a very small retracement within there. You may argue that this is some inducement for the zone. It's not really the cleanest. The only reason I say that is because it actually has mitigated the zone. I'd much prefer if it was just below the zone. It'd be a lot cleaner for me, but we can look at that anyway. And yeah, I think for the moment, coming into this morning, this is all of the analysis I would have done. I would have alerts set on my POI, and I would simply just be waiting. There's definitely nothing down here that I want to be trading from. So we'll play price forward, and yeah, we'll pretty much go through this entire day's worth of data. So coming into the morning, price is just sort of moving around. We're not doing anything within this range. And there we go. So now this is what I was talking about, where we can mark out some of our internal structure. So we have our internal high here. We have our internal low down here. And we do actually have an internal break of structure. As I said, it's not the clearest internal sort of structure forming, as we are still within that larger range. We don't have any change of character yet. But when we have these really large ranges, I'm more than happy to be a bit more aggressive, I guess you could call it, with the internal structure. Otherwise, you may be missing a lot of opportunities when you're having to wait for price to play out these large ranges, as we sort of are now. So we could look to continue playing this internal bullish order flow now. The only reason I'm not the biggest fan of doing this is because we are approaching this supply level. We have definitely mitigated the EQ of the swing range. It's not even, again, as I said, the clearest internal structure, but you could be looking at this sort of flip zone within here, and we'll just mark that out. But yeah, really not the most high probability, probably not something I'd be looking at for myself in the live markets, but we will just continue playing price forward. As for what type of entries I'm looking for within this sort of supply zone, we do, as we were saying, have some sort of leg inducement. It is our extreme. So in this case, I would be happy to look for a risk entry down on the M1. Otherwise, I'd be looking for, maybe a sweep of this and a nice sort of M1 confirmation entry, or maybe even an M1 liquidation followed by a confirmation entry. Either way, I'm very happy to look for shorts from this POI. So before we just tap in, let's jump down to the M1 and see if we can find any setups. So down on the M1, the first thing I want to do is refine this M15 supply zone we have. As I said, I am more than happy to look for risk entries if we get into this POI. So I do want to refine this to an M1 candle. The easiest way to refine this is always going to be the extreme. As you can see, we've got this very small candle here. It's quite small in comparison to this zone, so I don't really want to over refine. So I'm more than happy to take this sort of large candle here. And I would mark that as our sort of M1 extreme. And this is where I would be looking for risk entries from if we're able to catch any. And I would just be dragging this across. Yeah, dragging this across to our most recent price, and we can lock it in there. As we were saying on the M15, we do have some form of lid, which is leg inducement. In this case, you may be happy to actually enter on an M1 risk entry straight away. Just thinking about this now, let's jump back to the M15 and see. So We are trading from the extreme supply, as we said. We do have a bit of leg inducement. So, you know what, in this case, I probably would be happy to look for a risk entry just because we've got this really strong bearish order flow. This is the last place price has to react, continue the bearish order flow. Obviously, we may flip bullish. We're due a pullback on the 4-hour and on the daily and really on the weekly, to be honest. But I am more than happy to literally continue playing this bearish order flow until it fails. So in this case, I'm more than happy to actually just set an entry straight away on that M1 extreme, which we'll do now. So if we get our short position here, we'd have our entry just on the zone and our stop loss would be just above. So we'll see what sort of pips we can get in, leave a bit of room for spreads, and I would be targeting that M15 low. We jump to the M15. And we are expecting price to break this week low. I would be taking partials at my internal low, but yeah, my final target definitely would be the swing low here. So we can place our order here. As you know, I'm risking 0.5% on this backtesting run through, so we'll be sticking to that 0.5%. This is obviously where you can put in all of your, amount you want to risk, your position size, price, take profit, stop loss, etc. But if you've clicked on this drawing over here, it will do it all for you. As you'll see, all I have to do is click save, and it's going to put that in for our sell limit, stop loss, and our take profit down here. And we'll jump to the M1 and we'll just see what price does. I'll talk you through sort of what I'm seeing. We've had a very small pullback. We've technically got an M1 change of character here. So arguably some more inducement forming, but not the clearest. Price has now swept that M15 inducement. So we could possibly tap it now and see a strong rejection. We'll just have to see. Having a small sort of pullback now, price is slowly pushing up further towards our zone, but we are not tagged in yet. We actually do have an M1 change of character here, but not something I'll be looking at for the moment for a confirmation entry. I would want to see this candle down here break. This is our point before liquidation, so it's that sort of flip before we broke that M15 lid. But this hasn't broken yet. We've got the change of character, but yeah, not something I would be looking at just yet. We'll keep playing price through and see what it can do. We still haven't actually broken through this candle now. You can see we've actually tapped into it. So we're currently reacting from it. And we have literally just broken through now. This could be a valid setup technically. The only thing I'm not really liking about it is we've got really choppy price action within here. If you're looking for entry from the extreme's been mitigated. If you're looking at entry from this first flip, that's already been mitigated. We've then got our second flip here, which would be this candle, but I don't really like how much room we've got above. We could just be forming more inducement for our risk entry above. So personally, in this case, not something I'd be looking for just yet. It is valid. If you wanted to get involved here, that would make sense. But just for me, not really something that I would be too keen on. We'll just see what price does from here. Sort of playing around a bit, we do come up, so we have mitigated this flip candle. So if you wanted to get involved there, you may have caught a nice entry. Let's see what price does. Sort of ranging around a little bit. Pushed up slightly higher. Yeah, really not showing much potential. And now we are coming into London lull. So between 10 AM and 12 PM, UK time, obviously, is what we call London lull. And this is the gap between sort of the London opening and New York opening, where volume's typically a bit slower. We typically see these types of ranges more often. But as you can see, price is now actually pushed up. So yeah, very glad we didn't get involved on this flip candle. We only saw a small reaction from it. Not enough for us to really profit from. And yeah, we're kind of just waiting for price to break this high. So if we mark this out as our M1 liquidity, there we go. And yeah, I'm literally at this point just waiting for price to break this high. I'm not really considering this demand zone anymore on the M15. If we jump back to that, you can see we have mitigated our swing sort of extreme supply zone. We are anticipating, this bearish trend to continue. So taking buys from this sort of demand zone is really not high probability anymore, and not really something I'm looking for. I will leave it in because we may see a reaction from here. But again, I don't think it's really going to be a tradable reaction, and that's what we're always looking for. So we'll just continue price playing through. I'll actually just speed this up a little bit and we can click play, and we'll see what price does. As you can see, we've now actually had quite a strong reaction from this zone. We've now tapped into our M15 demand, and at this point I would be deleting my risk entry. I would not want to be getting involved on that risk entry anymore, because if we come back into this supply zone from this demand zone, we've actually had a failed reaction. The supply has failed to do what it was meant to do, which was to break structure, either change of character, internal break of structure, swing break of structure. It's failed to do any of them if price does react from this demand and come back. So yeah, really not something that I would be looking for now. Arguably, you could be looking for longs. We can jump down and see if there would be any valid setups. I definitely wouldn't be taking a risk entry within here, but you may be able to find a confirmation entry. We can just see prices sort of ranging around. We haven't even had a change of character yet, so I would want to see M1 liquidation before looking for an entry. We do have that M1 change of character now, so I would want to see this get swept, but I don't really think we've even got enough room for price to really sweep this and then give a change of character, but we'll see what price does. If we just sort of skip through here quickly, let's play this through on M1. We'll see if we can get a sweep of that low or not. Again, just ranging around, now starting to come into New York session, and there we go. So we've broken through this demand, and at this point, it looks highly likely that we're going to break this internal low. That is what I am anticipating at this point. For this moment, I'm literally just waiting, sitting on my hands. I want to see this low go before I really look for anything. Arguably, we do have a change of character that could occur, pretty much has just occurred now with the break of this low. That's that very first sign that the trend is changing. But yeah, nothing too much I'd be looking for. If anything, I'd want price to come back up to this M15 supply zone and look for possible shorts within here. But after we've mitigated this extreme, it's quite likely that we see some impulsive price action as price targets this weak low. So yeah, we'll play through on the M15 and just see what price does. As you can see, we do get that change of character. We arguably have a liquidity sweep within here, actually. So we'll jump down to the M1, but it's really not the most high probability sort of setup to take, but we can do some analysis on it anyway. The reason I say it's not high probability to trade is because of everything I was saying before, that we've mitigated this extreme supply. We are heavily bearish on all time frames. We're actually expecting this low to go. Yes, it's technically a strong internal low, as it did lead to this internal break of structure, but swing structure always takes precedent over internal structure, and in our swing structure we do have that strong mitigation and reaction. So this is a zone I would be expecting to be broken, but let's jump down to the M1 and see what we've got. Arguably we do have a actually quite strong sweep, quite strong V-shaped reaction, but I think even if I was looking for an entry here, which would be from the extreme after this M1 change character, if we just mark this out, I think price has actually gone on too far for me to consider this now. I would have wanted to have seen a nice strong V-shaped reaction where price would have come back in. So if we just mark this out here, put this along, our stop loss just below. Yeah, also would have to use quite a big stop loss. So 9 pips on the M1 is actually very large with this strategy. And I would just be looking for a 5R target. This isn't something I would actually be taking now just because we haven't had that strong V-shaped reaction, but we can see what price does. I'm not actually going to place this order because, as I say, this isn't something I would trade live, but we can still, look and see what would happen just for a case study. And as you can see, price comes down to our entry, sort of ranging around a little bit. We get a bit of a reaction. At this point, even if I was considering it before, I definitely would be deleting now because we've had our second M1 break of structure. So to come back to our entry now, we would definitely need to see, another M1 change of character, which is not something I would want to be looking at. So at this point, I would be stepping away again, and I've got my supply zone marked, and that's what I would be looking for price to tap into. So we've just had that tap in now. Do we have any possible setups? Well, If we're on the M15, we've got our supply zone. We've clearly got no leg inducement. As you can see, we've got a really clean push. So for that reason, I would want to see some sort of liquidation or pullback inducement before looking for an entry. If we look at price here, we don't have any changes of characters yet. We have just had a change of character now. So before looking for an entry, I would want to see this high get taken. And that would give us our sort of M1 liquidation. And for a possible risk entry, again, I would be looking at the extreme, and I would probably take this candle here. So this is our extreme candle, and I would be dragging this along. But yeah, I would be more than happy to take a risk entry here, especially because everything on the M15 is aligned. But I would need to see price actually sweep this high. Not sure why it hasn't changed. Have a little X in. But yeah, this is pretty much the high we're waiting. You know what it means. We'll continue anyway. We can see prices giving some sort of reaction. I just want to see price sweep this high first, but we might not get that. As I say, price can often move quite impulsively after that, M15 extreme mitigation when that swing trend is ready to continue. And it doesn't look like, for the moment at least, we're going to see that high go. But now, yeah, 315, 320 coming into the end of the sort of session. Yeah, not too much I would be looking for within here. You jump back to the M15, you can see we're getting a bit of a range now. I would probably call it a day here actually on this Monday. So no trades, a bit frustrating because, bit of a no tag in here for that M1 risk entry. But yeah, September's actually in general been a bit of a slower month in terms of setups, but hopefully we'll see what the rest of the week can bring us. And yeah, we'll continue through on to Tuesday. Technically, I do trade until 4:30, but at this rate, I wouldn't really be expecting much. We will just skip through to 4:30 to see if there are any setups. Well, no, at 4:30, we finally get that internal break of structure. I'll delete that actually and replace it with this. So now we are fully aligned. Our swing is bearish, our internal is bearish. This is pretty much all systems go for looking for shorts. And that's what we'll be looking for when we come into sort of Tuesday morning. So guys, that concludes the run through of Monday's price action. Hope you've been able to find some value from that, even though we didn't actually manage to take any trades. We did have that one close call with the risk entry, but it was a no tag in the end. And that's just the nature of trading. Sometimes you'll be tagged in, sometimes you won't. You just always got to make yourself available to the market so that you're able to find out. Now, the next video in the series is going to be a run through of Tuesday's price action, and I think you guys are going to take a lot of value from this. We do manage to catch a really, really nice trade during London session, so I'm sure you guys will be able to take a lot of value from that. So make sure you hit the subscribe button and you'll be notified as soon as that video goes live. Cheers guys, have a good day.